Good morning, good afternoon, and good evening to those of you around the world. Welcome to the daily Trade the Chain crypto update, where we give you everything you need to know for the next 24 hours and hopefully the next few days. Today is Wednesday, January 4th. We are halfway through the first week of the trading year, and we are seeing quite the volatility on the stage of both equities and crypto. Currently, we're looking at the US dollar, which we've started with quite often. Not much to note about this. We're still sitting in the range. I will admit, yesterday I was, a bit incorrect in terms of my thesis in terms of, risk markets breaking out without the dollar breaking out. And I did mention this to the Trade the Chain community last night, elongated, in an elongated flattening of the dollar index for multiple weeks dating back to pretty much early December has clearly given the signal to risk markets, that there is some relaxation in volatility in relation to, there's relaxation in impact of the US dollar to risk markets, meaning risk markets are flourishing a little bit with a calm dollar. Calm seas, you can sail much faster. Think about it in that direction. Whenever, the seas are choppy, and think of the dollar as the sea, the liquidity that we constantly sail our boats in. If everything is calm, you can move quickly, you can get a lot done. If things are rough, you can't get a lot done. The volatility is probably going to be negative or non-existent, meaning ability and opportunity to make money and create value for yourself in the market. So calm seas on the US dollar relating to some volatility in risk markets. Will this continue? I would say, given the early indication, yes. But we still have, the 105 and the 103.5 level as support, or as resistance and support respectively. And these are two things we'll be looking out for in terms of a break that may either stop the bullish momentum or potentially bring in some bearish volatility. Or, if the dollar slides down, that could exacerbate bullish momentum as well, which we've been discussing for quite some time. So things to look out for the dollar. Nothing to note yet. Calm dollar equaling a lot of volatility. We will continue to note that moving forward. Looking at equities, let's go ahead and zoom out a little bit. We can still see let me go ahead and get rid of the SVP for a second here to clean up the chart. We are sitting, above a massive block of liquidity. We have a bit of a large block of liquidity sitting here up to 38.75. We do recognize that 38.75, obviously resistance as proven yesterday, and then supports, also proven yesterday as well. I did say that I would expect this more or less to hold, and it did. We ended up moving higher, obviously tagged the top of the range again. This move does look a little bit more strong than I've seen prior. We're getting towards RSI break levels where I would consider this to be quite bullish. It's also coinciding with both the resistance and the 100-day moving average on the 4-hour chart. So very key resistance level that we're sitting at here. If you can get above 38.75, there is a pretty large liquidity gap all the way up to 39.50. That is, we'll kind of more or less start at 39.30, but very large liquidity gap from current price up to where you might want to target with bullish momentum. It's about a 2% move. So definitely something to consider there. If we do get above the 100-day moving average on the 4-hour chart, which, like I said, coincides with 38.75. So get above this, you've got a target to 3,900. Get above 3,900, you've got potentially a clean break up to 3,930. Now, if you fail at 3,750, I think it would make sense that at bare minimum, back to 38.40, center of the range, or back down to 3,800, which is where we tagged, or at the very least 38.20. So if we fail at 38.75, then I would expect at least probably by tomorrow morning we would more or less be between 3,800 and 38.20 if we do get rejected here. So before we move on to Bitcoin, well, I guess while we move on to Bitcoin, I want to start with chart that shows, Bitcoin perp and spot cumulative volume delta. Now, the simplistic way to look at this chart is, it's basically directionality based on the type of asset being traded in the larger asset class, meaning you have spot markets, you have derivatives markets, and they both move, somewhat correlated, but still independently, as we can see here. Perps have led nearly the entire move this morning since we dumped right around market open. And of course, have led us higher, like I explained. Now, the issue is that spot participation has not been equal with perps. And just as an easy example, yesterday, I can show you how spot buying more or less led perps all the way higher into the first pump into yesterday evening and early this morning, depending on what time zone you're in. So the easiest way to look at this is typically when spot is outpacing perps, perps will catch up. And if perps are outpacing spot, spot does not always catch up. And typically the belief is that perps will eventually catch up with spot. Now, that's not a 100% metric, and certainly spot can catch up with perps and lead a very large momentum driven rally. But right now, the lack of interest, the fact that spot has not picked up past levels that we saw about 3 hours ago is definitely worry for a sign of continuation. And if we look at the chart, knowing what we know about, how Bitcoin has been trading and the fact that it's been unable to get above the 17K number, we mentioned it needs to flip 16.9K into support. Of course, it has an hourly candle, which is likely to close above 16.9K support, but under 17K. And it needs to hold 16.9K. So the fact that spot is not participating with perps, and that perps, that Bitcoin price is underneath 17K, needs to hold at 16.9K, definitely a worrisome, predicament. Now, could we drop down to 16.9 and spot eventually picks back up for a rally? Certainly, but right now the analysis to me is that perps will eventually, catch up to spot in one way or the other, which is probably, should be lined up with another potential 16.9K retest, which could end up leading it lower if it does not hold. So looking at that from a price action standpoint, of course, I told the Trade the Chain community if we could stay above the VWAP, which was 16.8 this morning, we would head higher. And of course, 2 wicks, beneath the VWAP with bodies above the VWAP, and we've only headed higher since then. So that was the initial outlook for this green line, which we headed up to 17K. Now we need to hold 16.9K, or else you'll end up coming back down to support, which is around 16.8 and 16.7K. So just to give you a bit better of an idea, if you get rejected at 17, you need to hold 16.9 to be able to move up higher. If you lose 16.9, you of course have this POC at 16.85, and then you have 16.8, then you have 16.7. If we bring back, I don't know why this is giving me trouble. Oh, because it's not wide enough. Let's check out liquidity here. So we can see there's a massive block of liquidity in this area. So you would expect, some volatile trading, or at least, maybe a flat trading pattern for several hours in this area. And of course, if it gets beneath the 16.8 level, then you're heading back down to the 16.7 level based on where liquidity lies. And of course, this is our previous daily close. I don't think that we'll get back down there today. I don't think that's a solid target immediately, but it's something to make note of that yesterday's close was at 16.67 for potential target later on down the road. Looking at Ethereum, very similar to Bitcoin in the grand scheme of things. We noted that it had to cleanly break above 1230, which it did, as you can see, very late in the evening yesterday. Broke above 1230. It caught on 1230 and zoomed higher. Now, this is definitely a bit of a difficult trade based on the outlook that I gave yesterday. I was a bit incorrect expecting Bitcoin and Ethereum to tag the lower end of the range before increasing. So definitely missed out on a bit of that, which I apologize to our followers for. My outlook was correct. A confirmed close above 1230 would likely lead us higher. It happened, but it happened a lot quicker than one would like. So you would have to be very, on the ball in terms of catching that, or you would have had a bit gone away from my strategy and entered longs a bit early, which neither would have hurt you. It's just a bit more of a difficult trading path, if that makes sense. So where we're at right now is above 1250, which we know to be, kind of top of, technically this was the top of the range. You could extend this out, but now we're getting back into the range that we traded in late November, very early December. So pretty much that range is 1230 all the way up to 1300. We had this deviation up here, so not counting that. So if we are confirmed in the range, meaning 1250 holds, then I would expect us to see Ethereum at 1280, potentially trying to tag all the way up to 1300, which is the top of the previous range. Now, the other outlook for this is that, this could be giant deviation where you are going to end up failing at 1250 again and coming back into the range. Like we said before, we of course told the trade the chain community above the VWAP things would head higher. It did. We typically drop that analysis between 6 and 8 a.m. PT. And of course, so good early morning trade if you follow that outlook. And basically, moving up, 1280 is resistance, 1250 is support. So we're in the dead center of the range. Obviously not a good place to long, especially with the fact that perp participation is not entirely leading, spot participation is not entirely leading or following perps whatsoever. So, my personal guess is that we'll probably end up tagging 1250 before 1280. But we do know our resistance levels, and if we get to 1280, potentially a good short, depending on how overextended we are, at least back to 1250. And then 1250 would be a fantastic level to hold to give us potential continuation to 1280 or 1300, as well as a potential signal of a break beneath 1250 to send us back down to 1230. So not the best trading play, or not the best place to trade long, in my opinion. I think shorts would probably be a little bit more friendly, but we do know that we've got some momentum, and that 1250 is going to be next level of support, and up Bitcoin, now back to the 16.9 level, starting to sell off as we're talking, pretty much just erased an hour's worth of trading. So, this is why we use this outlook, but important to consider, spot, perps selling off, and spot is liking this a little bit. We're seeing some Coinbase buying as well. I need to probably refresh my feed to catch up with that Binance feed, so just bear with me real quick. We can see, so Coinbase spot, Binance spot are liking this level. Nothing to tell me to start buying right now to long, but if you do believe that 17K is going to be broken by BTC, and you're seeing, perps decrease at resistance while spot buying is increasing, potentially a positive sign. So we don't have anything that's going to 100% give me immediate directionality here. Bitcoin continuing lower. So perps, this is what we mentioned, perps catching back up with spot. So if you would have, shorted the very top of this move based on that outlook because of what we said, you would already be, a little over 0.5% in profit. So of course, we can still hold above 16.9. Doesn't mean we will. We'll have to look out for that. We know that as a very critical area of the range, and we know 1250 is a very critical area of the range for Ethereum. So again, we have unemployment rates on Friday. That should bring in some interesting data and information. We also have employment reports, which should be kind of a preliminary data point to unemployment rate. So got a lot going on. Obviously, bull seems to be back on the menu, but I would be very careful for the reasons that I'm going to describe. And the narrative right now is that everything is so recession that we probably hit the bottom. The other aspect of that is that we've seen meme coin pumps, NFT pumps, absolute shitcoin pumps, and a lot of coins are up 50 to 100% from the lows. Now, if you kind of take all of that in, what narrative are you now late to? And I would say you're probably more late to the bull narrative that everything is going bullish because we're too bearish. Now back to everything is so bullish that we're probably going to be bearish again. So I'm kind of taking that contrarian outlook towards the highs of Bitcoin and Ethereum, the recent highs, noting that, a lot of NFTs and scam coins and meme coins and stuff like that are pumping for no reason, or for little reason other than, number go up, or everyone's so bearish, it's time to be bullish. And the interesting thing about that outlook is when everyone's bullish, it's probably time to be bearish, especially in the middle of a bear market. So I'm not saying that, I'm not trying to crush everybody's momentum and rally parade. I was definitely on that parade, and we talked about it in the newsletter, and we've been talking about it for a while. And we certainly have room, and a wide range for Bitcoin to get all the way up to 18.4, which it got to in early December. We, of course, have CPI next week, which could be positive, and we have unemployment on Friday, which could be positive. So not ready to say that that's done, but I am starting to say that, okay, from where we pumped off of the December 30 lows and from the, mid-December lows, is it time to start thinking about, are we either going to continue to range, or when will those that made money in this boost start to take profits en masse? And I have a feeling one of the two is going to come sooner than you think. If the data that we see that we're expecting, unemployment and CPI, is not absolutely mind-numbingly positive, meaning unemployment is a few percentage, not a few percentage points, a few tenths of a percentage point higher, and CPI is a few tenths of a percentage point lower. So these are going to be things that I'll be looking out for over the next week in terms of data. Of course, I'll continue to track my spot and perp system. If this does end up evening out to some degree, and it's still staying above 16.8, maybe a good long opportunity. But if you're tracking this with me and perps end up crossing spot, meaning, like here, what's the easiest way to show this? Like here, perps cross spot, we dumped, and then spot cross perps, and we pumped. So if perps cross spot again, I will be expecting a dump. And if spot and perps meet each other and spot begins to outperform around that 16.8 level, then, it's probably a good time to get back in. So this is why we wait for confirmation data as well. Binance spot, Coinbase spot participated. Now they're selling. And that little small rally that we just tracked is now, a bit of a dump. So this is why we track all of this information for your benefits. And of course, again, I'm not 100% correct on all of my trades and trade outlooks, but the goal is to give you the best idea of what's currently happening as we give you daily analysis instead of weekly analysis, which would likely be, more, 4-hour and 1-day charts. And we're trying to help you with trades every single day. So good luck. Happy trading. I'll be looking for potentially shorts in this range. And I'll be looking to see if spot participation can come back in and kind of recreate what we did yesterday and earlier in the week. So if you're not in the Trade the Chain community, that's where all of the juicy, acute trade ideas and information comes in every single morning. We do the show. We cover written analysis in the community during the afternoon and the evening. And of course, we restart that cycle every single day. So if you want both private and public information and good setups and ideas, then tradethechain.com is a great place to get it. So good luck. Happy trading. Speak to everybody tomorrow.